Good morning. Thanks very much for the introduction. Look, we are essentially a very, very simple story, so I'll certainly smash through this inside the 15 minutes. Gold-focused in Western Australia, we have two projects, Mandilla and Fayetteville. Mandilla is only 70 kilometres from Kalgoorlie. Fayetteville is 14 k's south of Kal. We have 1.4 million ounces in resource. 60% of that is now in the indicated category. So today I want to make this a very broad overview. The map that you can see on screen there shows Mandilla and Fayetteville, and it shows it relative to Kalgoorlie and Kambalda and Coolgardie. This area actually hosts 30 million tonnes per annum of processing capacity. It's up and running at the moment, with some final investment decisions being made by Northern Star and Evolution. That's expanding to 45 million tonnes per annum of processing capacity. This is a very, very mature field. Explorers have been prospecting in this area since the late 1800s, and as a result, large-scale, single open pit opportunities are increasingly difficult to find. And I'm going to say this a couple of times throughout the presentation. Something that is difficult to find is rare. Something that is rare is ultimately very, very valuable. The scoping study that we put out probably 7 weeks ago today shows that what we have is a large-scale open pit opportunity that is exceptionally profitable. It shows a free cash flow of $740 million, a net present value of $442 million, and that's at a discount rate of 8%, and that's all using a relatively conservative gold price of $2,750. The price hasn't been below $3,000 for over a month now. We also have 3 years of demonstrated resource growth. We have been able to continually demonstrate our ability to continue to grow those resources at Mandilla. Since the last resource update, which we put out in July of this year, we've completed an RC and diamond program at Thea, an air core and RC program at EOS, and we are currently diamond drilling at our other target, which is Fayetteville, because there's quite a high-grade opportunity there, which is the Camperman prospect. When we drill, we add ounces. We absolutely expect this current drilling to continue to grow our project. The RC results on Thea came out last week. I'll put out air core and RC results for EOS next week. The diamond drilling at Thea, we put 6 holes into it. There was gold intersected, visible gold intersected in every single hole. Those results will come out probably just before Christmas, and some of those 6 holes might leak into the new year. And then we've got that diamond drilling that we have currently going at Camperman, and those results will more likely than not be out in the new year. Just the one corporate slide, 3 takeaways. We're well funded to do the exploration and advance the project that I'm actually talking about today. Our share price performance in what has been a very challenging environment for junior golds is actually pretty strong relative to our peers. We're probably up about 15-20% on the 12 months. I would suggest that good performance is a reflection of the quality of the resource and the quality of the scoping study that we've put out. We have a supportive shareholder base. The management team, we all have a meaningful position in this stock, so we are very motivated, and I put my own money in to get this position. We have a strong top 20, and we have growing interest from an institutional perspective and a growing institutional presence on the register. So now you can just see Mandilla on the local area geology. We have 4 deposits, Thea, EOS, RRS and Hestia. 37 million tonnes, 1.1 gram per tonne, 1.27 million ounces. The last 500,000 ounces have come through in the last 2 resource estimates, and that's come in at $17 an ounce exploration cost. So it's worth $3,000. It's costing us $17 to actually add new ounces to this resource. Another thing about going from resource into a production target, and then obviously when you put out a pre-feasibility, you can actually declare a reserve, but how you convert that resource into a production target is exceptionally important. Thea, 80% of those resources converted into a production target. So if we add ounces, we can then demonstrate that they actually make money in a production target scenario. Thea absolutely drives the financials for us. It is the only 1 million ounce deposit of this scale in our region. We are in a peer group of 1. And again, remember, if something is rare, ultimately is very valuable. And remember, there is soon to be 45 million tonnes per annum of processing capacity within the area that we actually currently habitat. So Talking about quality of the resource, I think we started the session off today with Spartan. So the interesting thing is Gascoyne Resources, prior to Simon getting involved, probably not the most successful outcome for shareholders. That was a 1.1 gram ore body that turned into a 0.8 gram ore body and ended up not succeeding. The interesting thing is when the administrators came in to actually see whether they could recapitalise that project, they went to a particular mining consultant and a particular individual within that consultancy, and that's the resource estimate that they went with to determine whether they could save the business. We've gone straight to that resource estimating consultant because the only way we are going to succeed is actually take this project all the way through to production and development and demonstrate our ability to get that debt funding that will build this project. So obviously we are acutely aware of those risks. This resource estimate has that conservative aspect built into it. We understand that the resource estimate is the most important determinant as to whether your project will ultimately be successful or not. We are currently working with infill drilling. We are doing modelling to understand how the ore body will respond as we continue to infill this ore body over time. The bar chart that you can see there shows our resource growth over the journey. We put out our first mineral resource estimate in 2021. Since then, we've grown another 153%. The most recent resource estimate was July of this year. The focus there was to increase the amount of indicated ounces that we had in this ore body. And you need to do that because when you put out a scoping study, you need to show that you have 70% of those ounces already in the high confidence indicated category. And that's what that resource estimate that we did in July achieved for us. So just moving on to the scoping study, a very conventional, simple open pit. It has a strong grade profile of 1.3 grams per tonne for the first 7.5 years, producing 100,000 ounces per annum. The processing is simple. It's 3-stage crush, single-stage ball mill, and then CIL for gold recovery. The recovery is plus 95%. The gravity recovery is over 70%. We achieve this in a coarse grinding environment, so over 150 micron. And when you compare peers, if someone is grinding their ore body down to 75 micron, that is double the kilowatt hours that needs to go into that to actually achieve that size reduction. So it presents a real cost advantage for us. As I said, it's large scale, 2.5 million tonnes per annum, 8 years of mining, 11 years worth of processing. With this scoping study, one of the important things to note is the geotechnical design, the mine design and the schedule has all been completed to a definitive feasibility level of accuracy. The mining costs and the processing and the metallurgy work has actually already been done to a pre-feasibility level of study. So we have concentrated on making sure we have a quality resource, and given that mining represents 60% of the cost base, we're actually really well placed to take that scoping study through to pre-feasibility because we've put our effort in where it really matters, and that's that 60% of the cost base. So looking at the financials, conservative gold price environment of $2,750. The pre-production capital is $191 million. The payback is 9 months and the internal rate of return is 73%. So really, really strong financials. That $740 million worth of free cash flow generation jumps to $1 billion if we use today's gold price. The $442 million net present value, which is being discounted at 8% per annum, that jumps to $600 million worth of net present value at today's gold price. The all-in sustaining cost is $1,648 an ounce. So very, very cost effective and a high margin to this business. I'll just show the one longitudinal projection for Thea. So this is what a 1 million ounce single open pit deposit looks like. It is still open at depth. It is still open on the flanks. The recent drilling that we did, we got 50 metres at 1.2 grams per tonne on the eastern flank. So we know that we can continue to grow this deposit. As I mentioned earlier, Thea drives the project economics for the scoping study, and that's because it's a 5.7 to 1 strip ratio mine. So you're not moving a great deal of waste to generate that revenue, and Thea is absolutely the cash cow for this business. Another important point around Thea, and I actually made this observation at Diggers and Dealers earlier this year, is when I look at Mandilla, and specifically the Thea deposit, and I look 100 kilometres in every single direction, there are two deposits that challenge Thea. You've got Northern Star's Super Pit, And then you've got the Northern Star Red Hill mine. So they're the only two mines in the area that are actually bigger than Thea. Large-scale, single open pit deposits of this scale are very, very difficult to find. Difficult to find makes it very rare. Something that's very rare is ultimately going to be very valuable. I'm just going to do 2 slides on Fayetteville. So Fayetteville is our other project. Remember, this is only 14 kilometres south of Kalgoorlie. We have the 92 million ounce super pit camp just to our north. We have the 3 million ounce new Celebration camp immediately to our south. And then you have the 20 million ounce St Ives camp 40 k's to the south. So it's a very good jurisdiction. We have 116,000 ounces here. We have a 55,000 metre database. We only drilled here for the first time in January this year because our effort was fundamentally at growing Mandilla, which we have successfully done over the last 3 years. That 116,000 ounces, none of that has actually been brought into the Mandilla scoping study. So there is significant leverage to continue to grow this project. It would consume about 0.1 grams per tonne if we were to truck Fayetteville to Mandilla. So it is infinitely truckable. It is not as if it's hundreds of kilometres away. It's about 50 k's away. We had good results at Rogan, Josh, Hyperno and Ethereal when we went and targeted this in January, but the project we were probably most interested in with the results that we got was Camperman. So we've drilled 9 holes into this so far this year. We've got 4 metres at 95 grams, 21 metres at 4, 30 odd metres at 2, 10 metres at 5, another 6 metres at 6. It's a pretty good strike rate, 9 holes to have those sorts of results. And we've also got a historical hole which is 13 metres at 9 grams per tonne. This thing is open along strike, it's open at depth. Is it 50,000 ounces? Is it 500,000 ounces? It's too early for us to tell. But we have 3 diamond holes going into this project at the moment, and we have a 2,500 metre RC program going into it early next year. And when you take this type of material, which is arguably higher grade than the 1.3 grams per tonne that we're feeding into Mandilla, it will have a significant difference and impact on what are already really strong financials. So just in closing, our scoping study demonstrates that we are in possession of an exceptionally profitable open pit development opportunity. The study has been done to a high degree of accuracy, arguably much better than scoping. The resource model is robust and we are focused on continuing to make that even better. Ultimately, we know that when we want to get debt from a bank, it needs to stack up. And just a little bit of context. The entire management team that's in this business, 3 years ago, we took a project all the way to development funding, and then we got Silver Lake to pay 70% of the future value of that project up front for our shareholders. And within 6 months, those guys were building what we had designed. So we're not a group of people that's going to create a smoke and mirrors outcome. This is a solid scoping study. It will turn into a solid pre-feasibility study. The metallurgy here is really simple. The processing technology that we have chosen is proven. The revenue consumptions are conservative. 2,750, we're at 3,025 today. You guys will either have a view on the gold price or you won't. If you have a strong view on the gold price, then this is something you certainly want to be interested in. It's a 90% internal rate of return using today's gold price, $600 million net present value, $1 billion worth of free cash flow. We have 3 years worth of proven resource growth. Our intention is to continue that growing. As I said, RC, Air Core and Diamond programs done at Mandilla, a Diamond program currently underway at Fayetteville, and RC to start off with in the new year again at Fayetteville. That Camperman prospect is a genuine high-grade opportunity. And most importantly, there are no peers that come even close to having the scale of opportunity that we have in the location that we have. And as I said, something that is rare and has that sort of scale is ultimately going to be very, very valuable. Thank you.